Thanks. I'm delighted to be here at FinNext 2023. I think the experience has been phenomenal. The energy levels, my interaction with people, both panelists on and off stage has been very good. I think the quality of interactions was supremely higher as compared to a lot of other engagements that I've been to. The one thing that I liked about is that the questions from a lot of people, the interactions, the exchanges were very pointed. So that means that people actually got a lot of value out of it. So I enjoyed the sessions. I think that's a great question. One of those questions which is on everybody's mind right now. I think the industry indeed has been at a crossroads. And one thing that I would call out particularly is that regulation has kept every company at its toes. Whether it be a fintech company or an NBFC or even large institutional banks. So regulatory changes have happened very rapidly in the past 2 years. Keeping pace with that, kind of evolve and adapt, that's the one. Second thing has been the entire capital situation given the global capital markets and how that has affected the sentiments of global, I would say, investors as well as Indian investors, and then in turn, affecting younger companies which require capital. So I think the investment climate, the capital climate is the second thing which has kept everybody on its toes. And I think the third thing is the inherent business model. Like what does your company really do, and are you going to make money in the short term or in the long term? So I would say, to sum it up, regulation, capital markets, and business model are three things which every fintech company or every fintech founder is thinking about right now. I think going ahead to the second part of your question, it's a very high growth industry, financial services as well as fintech. The contribution of fintech revenue to overall financial services revenue is in low single digit percentages, which means the opportunity for a fintech to come in and create value for customers and to expand the industry, expand the pie, is huge. It's going to benefit customers, it's going to benefit traditional banks and institutions, and of course the company itself. So I would say the future is, I'm very bullish. For lack of any other word, I would say it's almost like a gold rush for the next 20 years. And it's going to be the responsibility of responsible fintech companies to create value. Yeah, I think India is probably going to be in the top 2 or 3 in terms of growth rates. So if you look at APAC, you can divide APAC into probably broadly 2 categories. One is developed APAC and the other is developing APAC. Just like you said, developed countries and developing. In the developed APAC, traditionally you would count Japan and South Korea, let's say, one or 2 big names. And in the developing APAC, you would probably have, India, China, and some other countries as well. I think it's very clear that China, of course, is a very large nation and a large economy. But coming to us in India, it's also well established that India today is one of the most formidable economic forces on the planet. We are growing very fast as a country, and credit is going to be powering, financial services is going to be powering the economy. So if the economy and the GDP were to grow at a 7% CAGR, the fintech revenue itself from today till 2030, 2031, so let's say the next 8 years, is going to grow a minimum of 6 to 7 times of what it is today in terms of the overall industry contribution. So I think that India's contribution in terms of growth rate will probably be in the top 2 or 3 in terms of growth rate. In terms of actual monetary value contribution, we are still early. So we will probably not be able to match up to the size of the North America as an overall market. GDP per capita, the currency, I think a lot of factors at play there. But that itself is a massive opportunity, which just tells us that we all are just scratching the surface right now. It's like an iceberg, right? You see a top, which is the tip of the iceberg, but the majority is still underneath. So I would say India is going to be leading it. The fintech industry will see upwards of 20% CAGR on a lot of fronts. There will be companies which will struggle. So some parts of the industry will face a lot of turbulence. But as long as people can keep regulation, business models, and capital access at the heart of how they ethically run a business, I think they should be able to match up, if not beat, the overall industry growth rate. So any fintech growing more than 20% annually is actually beating the industry growth rate. And India is going to be a major world player as far as fintech is concerned. See, at the heart of the question is maybe in my mind another question as like, why does everybody want to talk so much about data? Right? We understand, we hear things like data is the new oil and so on. But I think you have to understand that we today live in the information economy. So if I need to go and get something, the concept of barter still exists. Just the fashion of it has changed. Now I need to pay money in order to get goods and services. I think as an economy and as an industry, we are going beyond traditional exchange of goods and services. People want more value. People want value from institutions that are not ready to give them value, which is a classic case of poor financial access in our country. It is coming down to a problem of financial access, deeper geographical penetration, more value for the same capital. And you cannot go above and beyond unless you have more information available, because only then do you have an advantage or an asymmetry. So at the heart of all of this is the pieces of data that you consume. If you can understand the customer better, and if you can understand your own value chain better, you find pockets of innovation and value. Customers are not inherently against sharing data or information. Customers expect what any person would expect, and that's a fair expectation, which is trust. And you provide good value in exchange for the data that I share with you as a customer. So as long as we can provide genuine value as an industry to customers and do that with trust, without breaching the law of the land and operating within the bounds of ethics, I think there is a solid case to be made that more and more data access will become mainstream. Data security, of course, is a concern, whether it is an external security threat or just mere involuntary lapses, I would say. To solve that problem, one needs to make sure that you are up to date with the best cybersecurity standards and IT standards. So I think there are two different problems over there. One is, what can you do to make your systems more robust as infrastructure, protect against threats, protect the privacy of customers on the data front. And the second is, what is the customer willing to give? And I think on both fronts, I see tremendous progress happening because the trust is improving, our systems are improving, we are getting better and better at our technology as a country. And I think all of this is going to overall lift the industry and the value. And probably we'll be able to treat data in a fair way as we go along. See, I think let me break it down into two parts. Digital lending is digital plus lending put together. Lending, I think one of my colleagues was very right in saying that we are a credit-starved economy. As a country, we do not provide credit to every individual through structured, regulated means, which means people have to rely on unfair lending practices, which is quite sad actually. So that's one major opportunity right there. Lending will grow. We are probably less than 10% structured penetration of credit in the country, which means the opportunity is just mind-boggling. Till we get to, let's say, at least a 50-60% penetration, it's just going to be an unlimited growth trajectory, which probably, let's say, would happen in the next 20 years. We could do it sooner, but I think the hunger is not going to stop there, because once you have access, then you want to grow, then you want more. So I think the path, like I said, is one of opportunity. The second aspect is digital. I think what one of my other colleagues that you referred to is that digital lending or fintechs might overtake traditional institutions. Well, it's anybody's guess. It's a great controversial topic to talk about, but I think I can say one thing, that the future is one of collaboration. If anybody thinks that just a new age company can come and completely put a well-established bank out of business, I think they are wrong. They don't understand the industry or the business really well. I think banks serve a phenomenal purpose in the country. We wouldn't be here if it wasn't for our banks. Do they have shortcomings? Absolutely, just like any other institution does. Are there opportunities for new companies called fintechs to come in and eat their lunch? I think opportunities are there, but it is not about eating the lunch. We are not an over-penetrated country. Today, the opportunity is in increasing the size of the pie. So I think the future is one of collaboration, where a new age company, specifically a digital lender, would be able to understand the basic tenets of lending really well, compliance, ethics, regulation, law, and combine that with digital innovation, and then be able to put better products faster, cheaper to the customer, which then increases access. And along the way, you can collaborate with banks, whether it is on capital, whether it is on other infrastructure. So I think the future is digital. If anybody thinks it's not digital, they're probably not reading the tea leaves well. But India is not yet 100% digital. It's like the common parlance of saying it's phygital. It's physical and digital. But digital is going to lead the way, combined with the old school traditional brick and mortar trust to some extent, I would say. So I think that's where the future is. We have to hold hands and kind of build it together.